Welcome to the Commercial Know-How podcast, where mortgage brokers learn how to successfully launch, manage and grow a commercial finance business. I'm your host, Belinda Gibson. Join me as I draw on more than 25 years of property finance expertise to show you how to diversify beyond residential and build a growing business for all seasons. Don't forget to hit subscribe and visit commercialknowhow.com.au to download my free ebook to help you get started in commercial finance. Now, sit back and enjoy the episode. And welcome to Commercial Know-How. Today on the show, we're going to be talking about getting started. How do you actually start writing commercial, and what does a potential client look like? What types of questions do you ask in that interview? So I asked some mortgage brokers in my network to email me a question about commercial lending that they're curious about. The mortgage brokers that I spoke to are experienced residential lenders, and they were all business owners. Now, to help you as well, you can also download our free ebook that will give you a guide about getting started, right down from that first vetting question and the first interview guide. Now, to help with the Q&A today, I've asked Kylie Donnelly, a finance broker whom I work closely with at TM Finance Group, to ask the questions and who they're from on a first name basis. So, Kylie, you are the first team member that we have had on the show. Welcome to Commercial Know-How.
Thanks for having me on, Belinda.
Now, we've had a few questions come through. I think we've narrowed that down to about 7 since we put out the call to action.
Yep, that's right.
Are you ready to get started?
Sure am. So the first question I've got is from Emma in New South Wales, and she has asked, what financial information do I need?
Oh, that is a great question. So, Emma, you will remember being a resi broker that you are typically going to ask for the last 2 years' financials and your client's tax returns. They may have a spouse that's on wages, or they might be paying themselves a wage through their business. So that would be the initial financial data that you need. But also being in resi, you will know that a bank is going to want a lot more. There might be more than one financial entity with, or more than one company entity, so you need more financials. There might be a family trust. And Kylie, we also get asked for BAS and what else?
Yeah, tax portals, management accounts. I find that when we do the business transactions, they want current data, like the most current we can give it to them. So it's not as cookie cutter or tick and flick like last 2 years' financials and NOAs, that they want to know what's happening up until like today.
Yep. Trend is your friend is your common saying, isn't it?
Yeah, that's right. That's what I've heard a few times from the business bankers, and also finding at the moment as well with the rising interest rate, because a few of the deals are marginal, so they are relying on those forecasts and what the funds are actually going to be used for, and all of that sort of stuff. So yes, trend is your friend. If you've been growing, the businesses and banks want to help you.
Yep. And then the second question?
Yep. So the second question is from Ryan, and they have asked, when looking at a commercial or business lending, can I use residential security, or does it have to be commercial?
Yep. So you can use either. So residential security makes sense if that's what they've got available and it's unencumbered, but it really comes down to what are they wanting the funds for. So if they're buying a property, typically we're going to be using that property as security. If they are wanting to borrow 100%, there might be some additional collateral or security that's available on offer that we can use to make up a fully secured application. Medicos, if you're thinking about, some doctor's surgery, they might actually be in a residential property, and some banks are willing to lend higher on the LVR, but it does come down to the purpose of funds, what's already lent out there. I'm sure you've got stuff we could add there, Kylie, on that one.
Yeah, I blend that in the business space versus residential. So generally we're just taking residential security, and sometimes you can take cash for guarantees, but in the business and commercial space, they can do like an unsecured loan where they would take a charge over the business and then equipment. So it's not just necessarily based on property. There's a whole range of things you can finance that isn't even necessarily real estate in business lending.
Too true. Yep. And then and that leads us into that third question that we've got here.
Yeah. And this one's from Raj in Victoria, and they've asked, what do I need for my first interview and how do I prepare?
Yep. So this is quite common. I think that's that scary stepping stone moving from resi into commercial. What do you say when you're taking that first phone call? What questions do you ask in the interview? So the first one I would be saying is download our free ebook and have a look at that, vetting that first phone call. Just have it on your desk and you can there's some questions there that you can ask, scribble down the answers as your client's talking to you. You can make that appointment. And then we've got some tips there on that very first interview guide. So questions to ask at your meeting, they're open-ended questions to get your client talking. And then we've got some background, websites that you can go to learn more about your client later on in the ebook, and some additional tips on, building rapport, establishing relationships, asking targeted questions. But then also, if you get one response, what's the second follow-up question that might be relevant to what your client's telling you? So practice makes perfect. Even if you do a bit of a role play initially, just to build your confidence up, it does become a lot easier. Do you want to add anything there as well, Kylie?
No, I think you pretty much covered it off. I would just say if it's your first interview and you're worried, I would just get a bit of background knowledge and understanding what the client actually does. So, looking them up and getting a bit of industry scope, and then confirming it is what they actually need and what the outcomes they're looking for. Because sometimes our clients say they want things, but it's not what they actually want. They're just calling it that name. I think a lot of listening to what the client wants, what their plans are, and then you taking that all back down and then confirming it with them. And they don't expect the answers in the meeting. I think that if you go away and say, I'm going to find out this information for you and see if this is possible and what you're wanting to do, and then following up and then getting that second appointment with this is what we can do.
Yep. Yeah, great answer. Okay, what's up next?
Yep, so now we're on to our fourth question, and this is from Colin and Tassie, and they've asked, what do I look for in the financials and what can be used as add back?
Yeah, I think this is probably my favourite question that's come back because it's different for every business. So typically, we go straight to the profit and loss statement and we're looking at that net profit before tax line. But then we want to get to that EBIT or EBITDA position. So we're looking at the interest add back. We're looking at the depreciation add back. And then we've also got those very common ones like directors' wages or superannuation above the superannuation guarantee charge for the directors. I'd have to say Kylie's favourite is going to be the instant business asset write-off and different treatments that the banks have for that. So I'll let you elaborate a little bit on that one.
Yeah, so when we're looking at the non-recurring expenses, when it's under the instant asset write-off, many banks will just take that figure and then add it onto the net profit. But we've had some lenders that let you apportion out the value. So what would be the standard depreciation, and they let you add that back as depreciation, and then the balance is then added back to the non-recurring expense, which can then improve the client's borrowing capacity because the portion that was accepted as the standard depreciation is tax-free.
Yep.
So yeah, I think that that's probably my most favourite to see what the bank actually does and how they assess it, because we've had many different responses. Usually requires an accountant's letter to confirm what the position is, like is it instant asset write-off and what would it actually be if it wasn't. And then I suppose all the other non-recurring expenses that you can add back, like you were saying, Belinda, and then also looking at items that are non-recurring income. So that's important to note too, because sometimes if you just put the financials in and you haven't actually read them, you're going to get more questions and you want to be able to have the answers.
Yeah, so a good point that, when we were talking earlier, you raised about COVID, we've been there, done that, but it is still relevant in some financial years.
Yeah, that's right. So some, especially like in accommodation and in Victoria, there were people receiving like cash flow grants, and they were receiving, like energy grants and boost grants, things like that. And we've had lenders before that have said, no, we don't accept that, even though we had the more recent year 23 figures, which were in line. That wasn't like it inflated the figures, but they said that's just our policy. So they strip out a whole heap of income, even though we've justified that it didn't actually improve their position. So I think it is important to note and just say, is this okay to the bank, and will you look at this? And just so then you've got all your comments and you're ready to go. So the more prepared you are for your conversation with the banker and in turn credit, I think the better chance of success you're going to have.
Absolutely. And Colin, just to add to that, so if you do have any income on the profit and loss, like a diesel rebate or some apprenticeship income, that's perfectly acceptable to use. You don't need to remove that out. So things like amortization, depreciation, interest, business asset write-off, directors' wages, directors' fees, or directors' superannuation above are pretty much standard add-backs as a wrap-up. Yeah. Okay. All right.
And then, so the next question's from Mel from Victoria. They have two questions. How long does the client need to be in business for? And can we just lend for any purpose?
Yeah. So this question, Mel, is a little bit bank specific or lender specific. So, the rule of thumb is always 2 years, but there are some lenders who will accept 18 months, and then the rare ones, which are 12 months. Typically, it could be a non-conformer. But you need to understand a little bit more about your client. So have they actually only been in business for X, or have they had a change in structure? So sometimes, you might see a client who started out as a sole trader, and then they've changed into a family trust structure or a company structure because their profit is growing or their business structure is changing. There might also be more than one entity, and that's perfectly fine. It is very common. We have had a lot of transactions in the past where we've had to get an accountant's letter that says, they've changed to a company structure this financial year because X. I've actually got a client at the moment who in 2022 has been a company structure. They had another business in a partnership, but for 2023, it's all been rolled into the one company. And that's okay as well, because we've got the supporting data behind that to follow the story through. Kylie, you've got a good example for this as well, where, people have been told no.
Yes, that's right. We've had quite a few deals have landed on our desk from clients who've been to see another broker, and they've just said your ABN isn't registered long enough, or perhaps they've been straight to the bank and they've said, no, you don't qualify. And then through a bit further investigation, we realised, well, okay, you started off as a sole trader, then you've gone into a partnership, and now you're progressing, and now your accountant's recommended the company structure. So actually, even though this hasn't been registered for that long, it doesn't necessarily mean it's been self-employed for that long. So when you can paint that picture for the bank and provide the evidence and the accountant's letter to confirm this is the story, we haven't had a bank that said that we're not going to accept that.
Yeah, absolutely. And what's the second question that Mel sent through?
Yep. Can I just lend for any purpose?
Yeah, well, no. But let's just build on that. So just like Resi, you need to let the bank know what the funds are for. What is the client actually doing? Where will the funds be utilised for? So if you go back to that 5 C's of credit, who's the borrower? What's the character? What's the collateral? What's their capacity to repay? What capital are they contributing? And what sort of conditions are we looking for on the loan? You've always got to cover off purpose of funds and asking those questions around what the funds are going to be used for. It's no different to Resi. We also want the purpose of funds and the product to align. What would you build on there, Kylie?
Yeah, I would just say, making sure that it makes sense to the business and that it's either going to improve. So usually businesses are wanting to borrow to improve their position, and we want to make sure that that's in line and that the product actually matches what the client's requesting. So I feel like sometimes in the Resi space, you don't have to provide a lot of information. Simply a statement is enough to say this is what they're looking to do or we want cash out. In business lending, they generally want to know, but what is it for? So if you're saying I want to purchase a vehicle, but you're using your home as security, it'll probably raise some questions as to why you're not using an asset finance and why you're trying to use equity in the home. So I'd say that's really most worthwhile purposes that would be considered acceptable to the bank.
Yeah. Does it make sense? Would I take this finance out myself? Does the product align to the purpose?
Yeah.
Okay. And then,
So then the next question we've got is from Simon, and they've said, I'm comfortable with the profit and loss and the add backs, but what should I be looking for in the balance sheet?
Yeah, great question, because they can be difficult to read. And some are short and sharp and others are really quite long and detailed. So they are pretty much broken down into 3 sections. So assets, liabilities and equity. So, and then your assets and your liabilities are broken down into current assets, non-current assets, liabilities, current liabilities and non-current liabilities. So normally your current liabilities and your current assets is like money that you're expecting to come into the next 12 months or, bills payable in the next 12 months. And anything outside of that's normally in that non-current space. Equity tells you about the profitability of the business in the past. If it's a trust, though, you're not going to have any equity there because the profits are distributed. But, things to look for when you're reading that is, are there leases? What other business loans do they have? Are there shareholders' loan? What's their tax position look like? How much cash is in the bank? So this is where you're going to see a story. There's always a comparable year there. So, if they have gone and bought another asset like a new vehicle, you're going to see that flow through in the current balance sheet. If they've taken out a loan, you're going to see that loan coming through in the liabilities section. They may even have debtors or creditors in there if they are a trading business. What else can you add in there, Kylie? It does tell a bit of a story, the balance sheet.
Yeah, I think that you've pretty much covered it off. Then the bank's usually just looking to make sure that the company is solvent. So is there equity, or like you said, if the trust is at a zero balance, and then they just want to make sure that the movements in the sheet, what are they doing? So if you have a look from the year on year where it has the liabilities and it has the debt, and you can see that it's being paid down, then you can assume that's what they've done with their profit from the previous year on the financials. Or if they've purchased more assets, they might have more cash in bank, or they might have purchased more plant and equipment. So you'll see that increase. So it sort of tells you what have they been doing. Are they in a debt pay down mode? Are they in a growth mode? And then that helps you communicate with the bank, like this is what they've done themselves, and now they're asking you for help.
Yep. And we have built some, general or common ratios into our free ebook that will help you calculate things like capacity to repay, and then some different ratios around the current ratio. So, how much cash do they have in the bank for every, current liability that they hold as well. So that will tell you a story too. All right. Yeah. So I think we're down to the last question.
We are down to the last question. It's from Toy in Queensland. And I think this is a great question. How do you actually submit the loan? Is it like through apply online?
Have we got an hour? Because this is going to be different for every single bank. So pretty much it's going to be the very, very few and in between that are going to go through AOL. They are very much manual. So every bank has a different process. We are quite often, if you are very new and you're looking into, let's say we're putting a deal with a major bank, most likely you are going to have a paper form and it's going to be emailed directly through to your banker. Now, you may not have a banker yet, and that's where your bank BDMs are going to play a really solid role. They will recommend the right lender for your transaction, and you will then email the privacy consent to your banker with the application form, supporting documents, and your credit memorandum, covering off, those 5 C's of credit, who your client is, what they're doing, what they're buying or purchasing, where their funds are coming from, what their capacity to repay looks like. So that is all covered off so that when your banker gets the transaction, they can quickly give you some parameters around timeframes for your approval. But I must stress, every bank has a different process. Some of the smaller banks will allow you to put it through AOL, but I've found myself it's very manual. There are some software programs coming through from some really clever IT people who are trying to design deals to go through their platform straight into the lender. So if you're thinking about sort of the Ceto Plus or even Sympology have some apps available there. What can you add, Kylie? Because they are all different.
Yeah, I think that it's very manual and it's very banker dependent. So generally what we've found is if we could say, okay, we're going to go with the ANZ, we will email the ANZ banker and say, send us your current form, because you can't just download it from a website or rely on the one that you had last time because it's likely been updated. I feel like we've learnt the hard way when we've just used that one's only a month old. It's fine. It's not. So you just say, what do you want from me? And then they'll give you all the forms. We need all these forms signed, like their statement of position, their privacy consent. And it generally has a checklist attached to it. And it can seem like a lot. Westpac used to have the 32-page business, the BFA, where you'd have to complete everything. But if you did complete everything, they had everything that they needed. So, I think it's very much you just say to the bank, I want to put this transaction with you. What do you want from me? And then they'll give you all the forms.
Yeah. So it's pretty much about engaging your BDM. They'll put you in touch with a banker. They'll tell you what information you need and what their process is, what their timelines are. Because another thing you'll find is that you're not going to be able to look up a web page and find out what every bank's SLA is. You are fairly much relying on the banker to tell you where your application is and then communicating that back to your client.
Yeah.
Yeah. Anything else there you wanted to add, Kylie?
No, I'd maybe just say before you've even submitted the loan, because it's not as cookie cutter on the pricing. Like you can't go into the product selector and just tick a box and put in some LVRs and off you go. You need to pretty much tender it out to the banks and say, this is the transaction, what will you do? And then they'll get their pricing, their loan term, any fees associated that they have. So then you can see, where should I actually go? So you want to confirm, is this within your scope? Will you even do this deal for us? And then if you will, what does it look like? So then you're able to advise the client where they should go.
Yeah, I agree. And we'll have some more podcasts coming up around the actual process over time as well to just guide you that little bit further.
Yeah.
Well, thanks for joining us today, Kylie. That brings us to the end of our very first commercial know-how Q&A session. Real brokers looking for real answers, we'll call this one. I'm glad you were able to help us, Kylie, and our colleagues grow their knowledge and confidence. So that brings us to the end of today's episode. We look forward to you joining us again. And don't forget, you can download our free ebook. You can also reach out to us on commercialknowhow.com.au. Until then, this is Belinda Gibson, and don't forget, stay motivated, stay empowered, and collaborate together with Commercial Know-How. Bye for now. Thanks for listening to the Commercial Know-How podcast. Don't forget to visit commercialknowhow.com.au, where you can get in touch with me or download my free ebook to help you get started in the commercial lending space. If you enjoy the show, please hit subscribe so you don't miss an episode. See you soon.